Hi everyone, this is Steven. I'd like to welcome you back to our third video in the Candlesticks and Chart Patterns Module 3. Today we'll be talking about double tops and double bottoms, what that chart pattern is, how to trade it, how to look for the potential profit in that pattern, and where to set your stop. So let's get to trading double tops and double bottoms. Double tops and double bottoms are both trend reversal patterns. So you'll have a stock trending in one direction, and when you recognize the double top or double bottom, then the stock is most likely headed in the other direction, at least for a short time. In a double top, the stock touches a new high, reverses to a lower level, touches the high a second time, and then falls below the pullback low. In a double bottom, the stock touches a low, reverses to a higher level, touches the low a second time, and then rises above the pullback high. So a double bottom is a reversal of a stock in a bearish pattern. A double top is a reversal of a stock in a bullish pattern. Basically, the pattern that you're going to look for in the double bottom looks like a W, and in a double top, it looks like an inverted W. The price target we're looking for in this trade is generally the difference between the high and the pullback price, or the low and the pullback price. So let's say you have a stock trading at 17. The stock moves up to 20. It moves back to 17, back up to 20, and then back down through 17. The difference between 20 and 17 is 3, so you're looking for a $3 price target in that stock. So you're looking for it to fall to around $14 before you would cover a short position in the stock. Generally, the risk-reward ratio in this pattern is relatively low if you use the high or the low as your stop. So what I would recommend is using a trailing stop. In this situation, you can begin by using the high or the low as your stop, but then I would move my stop in a trailing fashion as the stock moves in the direction that's profitable for your trade. Now let's look at a couple of charts for an example of a double top and a double bottom. First, we're going to look at a double bottom in the chart of Thor Industries on a daily basis. Here we have Thor trending down from December 2015. The stock moves down, touches just above $48, moves back up to just around $53, and then moves back down to that $47.50 to $48 range. The price in the double bottom as well as the double top does not have to be exact. It doesn't have to touch the exact same price, but you want it pretty close. In a stock like this, $50 to $60 stock, you'd like it within, say, 50 cents to a dollar at the most. So when the stock has a pullback to the $53 range, you're going to take the difference between the $53 and $48. So we'd be looking for a $5 profit after buying the stock when it breaks through the reaction pullback high at this point. So this is your buy level. When the stock breaks above 53, you're looking to get long the stock. And again, you're looking for a $5 price target, which obviously was achieved in Thor in this situation. And that is the double bottom reversal pattern. So now let's take a look at First Financial Northwest. This is a classic double top pattern. The stock is in a fairly long-term bullish pattern. It hits a high at $21. Pulls back to around $19.75, pulls back up to $21, and then breaks that $19.75 level. And as you can see, you've had a long-term pattern here, and this double top indicates a bearish reversal, and it's a fairly hard fall from the top. So this is a great example of a double top, again, in a longer-term bullish pattern, and how powerful the double top pattern can be. Thank you for joining me for this video on double tops and double bottoms. In our next video, we'll talk about the head and shoulders pattern and the cup and handle pattern. Thank you for joining us, and I look forward to seeing you in the next video.